Once again, hello to you all connecting from all around the globe. Delighted to welcome you all to the roundtable discussion on financial management skills in healthcare. I'm Dr. Aline Nassar, the board chairman and CEO of Stokos Australia. On behalf of Stokos Australia and Knowledge Zone UAE, it is my immense pleasure to welcome you all, participants from 11 different countries around the globe, who join us with varied professional expertise. Today, I'm joined by our partner in Spain, Monferrato Consulting, represented by the founder and CEO, Mr. Mariano Gonzalez. Both Mariano and myself will be moderating the session. The science around patient-centered care is becoming increasingly sophisticated, and applying it has implications on finance. As leaders in healthcare, we are not only accountable to ensuring the delivery of safe patient-centered care, we are also held responsible to achieving the financial goals of the organization. To that, when planning and reviewing budgets, it is imperative that we understand and are able to analyze those figures, although we are not finance specialists. Our keynote speaker for today, Dr. Lara Macaron, will be equipping us with strategies and tactics on understanding healthcare finance and verifying to us that we do not need to be finance specialists to read financial statements. Dr. Lara Macaron is an executive consultant at Stokos Australia. We are privileged to have her on the team. She is an international and corporate finance specialist. Dr. Lara is also the founder of Visions for Business Development and Professional Training. She is a business consultant and an associate professor of finance at several universities in Lebanon. Her experience includes working at top-notch Lebanese banks for 15 years. She holds a PhD in business administration and a master's degree in finance. Dr. Lara also holds a certificate in economic development and entrepreneurship, as well as other certificates in banking regulations and anti-money laundering, sustainable development, strategy and leadership, women empowerment, life skills, and public speaking. Her teaching revolves around banking, corporate finance, financial market, and knowledge economy. Her research focuses on knowledge economy and corporate social responsibility. She is the author of a book titled CSR in Lebanese Commercial Banks, and she has several publications in international journals and local newspapers. Some housekeeping items, please. Dr. Lara will be pleased to take all your questions, the ones you put in the chat and the ones you prefer to ask in person. And she will take those questions at the end of the session. So kindly use the raise hand option so the support team can unmute you and you can ask your questions. Without further ado, I invite Dr. Lara to lead us in this informative journey. Dr. Lara, the e-floor is all yours.
Thank you, Aline, for your kind words, and hello to everyone. Maybe I can say good morning, good afternoon, and good evening, since you are connecting from different areas in the world, which is really amazing. I'm so excited to be part of this roundtable and hope it will be interactive and constructive. So let's start. So imagine that you got promoted to a key leader position in the hospital that you are working for. But you are coming from a non-finance background. Maybe you are a physician, pharmacist, nutritionist, engineer, coming from HR background, sales, whatever will be your background. And you are invited to this meeting to discuss the financial performance of the company and whether to take this decision or not, etc. And all the people in the meeting were discussing the financial terms, of course, and the financial performance. They were talking about the working capital, the assets, the net profit, the gross profit, the EBIT, EBITDA, the capital expenditures, the working capital, the retained earnings, and blah, blah, blah. and everyone is sharing his feedback, whether it's good, whether to do this, whether not to do that. And then you were asked to provide your opinion, since now you are a key leader, but the missing point that you are coming from a non-finance background. So could you share with us or describe your inner thoughts and feelings at this moment? What you will feel? For me, I will start Googling, what is working capital? What is gross profit, etc. Should we do that? Of course not. So what will be your inner thoughts at this moment? Are you feeling afraid, willing to communicate your feedback, or staying silent? What you will do?
Well, I personally will be terrified probably because they are discussing something that I have no knowledge of, and probably take the silent side, try to hear what others are saying, pick on some, and yeah, try to get some help without asking for it, if I may. We have in the chat, someone said disoriented. That's also
Any other feedback?
nervous.
For
Someone
me,
wrote nervous.
I will be nervous. I will be very tense. I will be anxious. I will be freezing, not able to talk. How I want to provide a feedback about something that I really don't know, that I ignore when they are talking about, and I'm really responsible to provide a feedback since I'm a key leader. So I will be very terrified in this position. This is my feeling. I don't know what about you.
We also have Walid who popped in a comment. He'll be worried.
That's why there are two main important things to know whenever you go to this meeting. First of all, you have to manage those terms. You have to understand them and you have to analyze them in order to be an active member in this meeting, and you are a key leader. The second thing that you have to be responsible and accountable. You are a key leader and your opinion matters, your feedback matters. Whenever you say, yes, we have to go to this decision that we have to do, we have to buy new machineries, new equipment, etc. So in your decision, in your feedback, or in your vote, you are driving the growth of the hospital and creating more value to the shareholders, and not only to the shareholders, but also to the stakeholders. Or maybe in your feedback, because you don't know, you are not aware, you are destroying the value of the hospital by saying something that is not good or it's not right. So for you, from your opinion, is it important to understand finance? So of course it's important to understand finance, because the quickest answer, yes, because we cannot manage what we cannot measure. And when we say we want to measure, it means there are numbers that you have to see them, you have to analyze them in order to have a better management. So let me share with you the organization structure of a firm or of a hospital, emphasizing on the role of the CFO. CFO, it means the Chief Financial Officer, who has mainly two main employees that are reported to him, which is the treasurer and the controller. The treasurer is the employee that is handling the cash in the company, the cash flow, the capital expenditures, the credit loans, etc. And there is the controller, who is managing everything related to the accounting, to the costing, to the pricing, to the tax. So what really happens in a hospital or any other company, that other than the CFO or the CXOs, if you want, don't like to deal with numbers. They are not accountant. They don't want to be an accountant. They don't want to be financial analysts, and they don't understand the numbers. They don't know how to analyze them. It's something weird for them, and they want to keep the numbers for the numbers people, for the numbers guy, for the CFO, for the treasurer, for the controller. And whenever someone asks them a question, they will call Mr. CFO what to do, what's the right decision, Mr. Treasurer, Mr. Accountant, Mr. Controller. So they don't want to be involved in these numbers, because of course it's a big mistake. This is the biggest problem here. And the other one, on the other hand, this CFO, when he shared his financial information on financial data with the key leaders, he shared everything. He would provide them with lots of information. He provided them with all the financial statements, with all the cash flow, the balance sheet, with comparative table with the previous year, with the financial ratio, with hundreds of them, and with the report of the external auditor, etc. So they will receive hundreds of pages, which they don't know from where to start and how to read them and how to understand them. So where is the biggest problem? Is the workflow between the CFO and the other CXOs. Yes, they have to share the numbers, but they have to highlight what are the key metrics that those employees should know, or those key leaders should know. More you are developed in the company and you are in a higher position, more you have to know about the metrics. And if you are at a lower level, yes, you have to be involved in the numbers, but only the numbers that really interested you. For example, if you are at a lower level, what's interesting you is the performance of your department, the profitability of your department. Whether your department is profitable, it means that it will reflect on your wages and salaries and compensation, and you will do lots of effort in order to, tremendous effort in order to get things better. And more you are in a top positions, yes, you have to be involved, but not in everything. You are not an accountant at the end. It's a science. You are not a financial analysis. It's also a science. It needs lots of years and degrees to be able to handle everything. Yes, you have to know, but not everything. The key metrics that really it's important to you to be able to be part of the decision making in the hospital or etc. So yes, finance is important to understand, because whenever you are in this meeting, so you have to handle all these words, you have to understand them. Yeah, whenever you understand them, you will be able to communicate with more self-confidence, with more authority, with more effectiveness, when focusing on what's really is good in the society, and don't waste your time on something that really don't matter in this company. Yes, it's important to understand finance, because business success couldn't be measured without financial terms. You cannot manage anything without measuring it. So you need measures, you need metrics. So it's for the visibility and accountability that improves also the performance of the employees and the performance of the hospital. So it's not just for the CFO and for the accountants, it's for everyone in the company, but each one according to his role, to his job in the company, and what's really interests you in order to take better decisions and drive the growth of the hospital through his or her decision making.
Certainly it is very empowering to know those terms and know what they mean. Thank you for that, Dr. Lara. Now I have a question for you, please. What are the key metrics or key ratios that leaders from a non-financial background should understand and analyze in the healthcare industry for them to be able to make decisions?
As I mentioned, Aline, there are lots of key metrics or financial ratios, and there are lots of things to know. But as I mentioned, everyone should know whatever will be his position or his decision making in the hospital. I think when you are in a key leader position, what you have to handle is in four main areas. The first one is related to the liquidity of the hospital. For example, how much this hospital has liquidity to cover its short-term debt. And the second one is the solvency, how much this hospital has liquidity to cover its long-term debt. And the other area is the profitability, how much this hospital is profitable, because at the end shareholders are here to generate profit. If not, they will invest elsewhere. So also the profitability is something that you have to understand. And the asset management or turnover ratio, it's everything related to the day-to-day operations while managing the stock or the inventory with the receivables of the clients and payables to the suppliers. Also, you have to manage them. So whenever you manage these issues, and also when you are in a decision making, you have to know that whenever you have to invest, for example, this is the cost of the machine that you want to invest, you have to realize and you know that when we use it, the cash flow that should be generated by this machine should be greater than the cost in order to create value. Because at the end in mind in any business is to create value for the shareholders. So whenever you manage those concepts, whenever you manage this key metrics ratio, of course you will be part of the decision making and you will part of driving the growth of the hospital.
Absolutely. So brilliant. Thank you. My next question to you is, how can we understand finance without going through the accounting system and the double entry of debit and credit?
Excellent question, because most of the people got confused between finance and accounting. For most of them, finance is equal to accounting and accounting is equal to finance, which is very wrong. So accounting is different than finance. Finance people are the people who look at the numbers that are prepared by the accountant or by the accounting department. So they have to look at them, understand them, and analyze them to better run the company, in better taking the right decisions in investments. So this is the work of the finance people, to work on the capital structure, from where to get to the money, where to invest, to calculate the financial planning and financial forecasting, etc. However, the accounted people are the people who are registering and making the records in the company in order to create the history or the data in the company. So how to know that this hospital is doing this care, the service care, etc. How much they are selling, how much is the cost, how much they have in their assets, how much do they have in their cash, how much do they have that. So how to know that? From the accounting department. They are the people who are registering and making those debit and credits, the double entry, debit and credit all the time. And for example, if we want to buy masks, what they will do, so they have to show this in the registers by, for example, debiting the purchase of mask and crediting the cash. So this is what they do. And it's very important to hire a very good and a very competent accountant, because the financial analyst will base his analysis based on the numbers provided by this accountant. So more this accountant is competent and honest, and more the analysis of the financial analyst will be better. And here I want to also illustrate this point, which is most of the people said that the finance is like an art. It's the art of finance, and you can do lots of things in the finance. So this is a misconception, and it's misleading, by the way. The art is not for the finance, it's for the accounting. And accounting is based more on assumptions, on estimations, on manipulation. And sometimes they record the transactions based on the personal opinion of the accountant. And here I would like to share with you a story that happened with me earlier in my career. So I did an internship in an audit firm. Okay, and they asked me to do the data entry for debit credit all the time, do the data entry, and at the end I would get my trial balance, and we should have the total debit, which is equal to the total credit. And one time, I get the trial balance, but it's not balanced. Total debit is not equal to the total credit. So I spend lots of time to try to figure out where is the mistake, where is the gap, and I didn't find it. So what I did at that time is to create some accounts, put the numbers on these accounts. Yes, I got the balance. I presented to the manager and I left. I went with my friends, but I didn't sleep all the night because I did something wrong. So I put numbers wrongly. So at the next day, I went directly to the office manager and I explained for him what happened. So just a small story that sometimes, even if I'm not talking if you are dishonest here, but sometimes there is some manipulation in the accounts. That's why there is an internal auditor and there is an external auditor to make sure that the accounting reflects the reality of the company. So that's why the accountant should be very transparent and should be very honest. And whenever they disclose the information should be very trustful, because all the key leaders, they have to rely on the numbers provided by this accountant, because he will do the financial statements. He will provide us with the financial statements. He will provide us with the calculation of the financial ratios. So our analysis, when we're in this meeting, we get the numbers from the accounting departments and we will be there to analyze them in order to take the right decision. So it's very important that the accountant should be very competent, should be very transparent, should be very honest. And here I will remind you with the case of Enron, the scandal of Enron, they went bankrupt because of the accounting system. They were communicating wrong data about their numbers, and will end up by going bankrupt. So the transparency and the accounting is very, very important for driving the future of the company. Yes.
Yes, brilliant. Sorry, I was on mute. My other question to you, Dr. Lara, is now I would like to know about what questions to ask in finance. Are there specific questions that we need to ask? Like, are there good ones? Are there bad ones? What questions do we ask so we know more and we get more information that is useful to us as non-finance specialists, but people in leadership positions?
What do you think, Aline? Do you think that there are good questions and bad questions?
I think I would ask any question. I would ask to learn more. Yeah, is that it?
This is the right answer. Yes,
Okay.
there are no good questions. And there are no bad questions. You can ask whatever it comes to your mind. And especially that I was saying that the accounting, there is a manipulation in the accounting system. There is assumptions, etc. And I told you the story. I shared with you the story. So wherever more you ask is better. So more you question the number, more you challenge the number is better. So and more people are involved in the finance, and key leaders are asking more questions to understand the numbers in order to analyze them, less the fraud will be happening in the company. Because you know that most of the cases of fraud were discovered by leaders that are not coming from the finance background, and they were questioning the numbers. So more people are involved and integrated, and they are foreseeing are watching or seeing the numbers frequently, less you will have a fraudulent case in the company. So it's very important to question everything. So there are no bad questions and there are no good questions. Go and ask everything. And here Jeff Bezos, what he said. So the common question that gets asked in business is why. That's a good question, by the way, but an equally valid question is why not. So don't stop on why, but go deeper and ask why not. Why not? And you have all the right to do this.
So this means that the more we know as healthcare leaders, the more we know about the terminology, the more familiar we are with it, the more we're able to ask questions and analyze and challenge those numbers and digits and plan better. Is that right?
So let's go to a small case study that I've prepared just to share it with you and just take it to elaborate some key points that you have to know about the P&L of a hospital. And I know when I said now P&L, most of you didn't know what do I mean by P&L. So let's go and talk quickly about the most important or the key financial statements in any company, whether in hospital, whether in another industry. There are three main key statements in a company. We have the balance sheet, the income statement, or the P&L, the one that I will share with you, and the cash flow statement. For the balance sheet, it's a statement that shows us how much the company owns and how much the company owes. It means when I look at it, I will see the assets of the company, whether it's current or non-current assets, whether fixed or current assets, and how they are financing those assets. At any point in time, I can look at this statement and I can see the assets of the company and how the company is financing those assets, whether by equity or whether by debt. So this is the balance sheet. The income statement or the P&L is the statement that shows us it reflects the income and the expenses generated by the company during a certain period of time. For example, during these 3 months or during the last year, I want to see how much the company is selling or doing services and how much is the cost, whether operational or whether non-operational. At the end, we will deduct from the revenue the cost or expenses, and we'll have the bottom line, which would be a profit or could be a loss. Another one, which is the cash flow statement. So it's a statement that shows us the movement in the cash. So you know how much is dynamic, the cash. So when we look at this statement, we see how much we have a cash in, how much we have a cash out during a certain period of time. And the balance of this cash flow statement, it should be equal what we have in our drawers, in our safe box, or in our bank statement. So in Lebanon, we are not using the bank now. That's why we say what we have in our safe box. So go back to the P&L, okay? In this P&L, so this is the P&L of a hospital with the last 5 years. The most important thing to know is the key sources of revenue, from where the hospital got its revenue. First of all, from the patient care services, whether inpatient and outpatient, in addition to the consultations with physicians, to the laboratory, to the imaging, to the pharmacy, etc. There is another source of revenue, which is the non-patient care service, which is related maybe to the parking, to the cafeteria, or the gift shop, which is non-operating, by the way. In addition to that, sometimes the hospital has a cash flow plus in its account. So what they do, they can invest them maybe in the stock market. And when investing in a stock, maybe you'll have a dividend. So it's a return. And maybe you can invest in the capital market in bonds, and you will have a coupon. Or maybe you invest them in a saving account in a bank and you will get an interest. So those are the financial revenue from your investment in the stock market or in the capital market, etc. And it's coming in your hospital. Another thing is the grants and donation, which constitutes a huge part in the revenue of a hospital. So in some countries, they receive too much donations from the government or from any charitable organization, which really constitute a big source of revenue for this hospital. Another one is sometimes the hospital has its asset machineries. For example, they have the X-ray machine and they want to sell it in the market because they want to buy another one. So the book value of this asset is, for example, $10,000, okay? So they can sell it maybe to another hospital at 12,000 US dollars, and they realize here a 2,000 as profit. So this is a source of revenue also that we can put it here. And also we can have a loss, by the way. So I'm talking about the gain, but at the same time, we can have a loss. So those are the main sources of revenue. Who is paying those revenues? Okay, the patient, okay? So whether the insurance, because we are insured, whether the government, because the government will pay on our behalf, or whether the government will not pay, or I'm not insured and I have to pay, I'm a self-payer that I have to pay the bill, okay? And the most important thing also that you have to know that a huge part of uncompensated care, whenever the hospital sends this bill to, for example, the insurance, for example, the insurance said, yes, this service, I will not pay for it. The other one, I will not pay for it. And the other, maybe I will pay. So they are some insurance denials. And also the government could make this. And sometimes the self-payer asks the hospital for a reduction. And sometimes the hospital do charitable care. They don't take money from some patients, etc. So this will constitute sometimes 5%. And sometimes 15% of the revenue. So it's a huge, this amount will be deducted or take it from the revenue. So we have the gross revenue minus the uncompensated care, we will have the net revenue. What about the expenses? For the expenses, the huge expenses in the hospital is related to the employees' wages and salaries. So it constitutes around 60 to 70% of the expenses. So what they have to pay for the physician, for the nursing, for the staff, for the technicians, etc. It's a huge amount. And then it will come the expenses related to buying the consumables, or paying the services, etc. And those costs are divided between direct cost and indirect cost. The direct cost is the cost that we are paying that is directly related to the service care that we are providing in the hospital. And there are indirect costs, which are the costs that are not related to the service providing and that we are providing in the hospital. What you have to know, here, the EBITDA here, we call it the operating income. It means the income coming from the operation of the hospital. Here it's negative, here it's negative, here it's slightly positive, etc. I shared with you this case study on purpose just to tell you in most cases the operational income is not that much high, and sometimes it's negative. So they don't generate too much income or profit from the operational activities. And here it comes from where they have this bottom line that's very positive. In most cases, and depending on the country that we are talking about, they receive donations, they receive grants from international organizations, etc. So those will help them to increase the bottom line. So I think, for example, in Lebanon, it's very challenging nowadays. And I think most of the hospitals have a negative operating income. So here it depends on each country, but in general, the operating income is not that much high in the healthcare sector. Okay. So I go quickly through all over them. Yes. Okay.
Lara.
Yes.
Yes. Can you hear me? I have a question here, which I think is quite important. So then, is the profit the same as cash flow, or what's the difference? Because sometimes we try to have different views when the hospital is going very well, many patients. But can you please elaborate a little bit between the profit and the cash flow?
Yes, thank you, Mariana, for the question. Because most of the people and most of the key leaders don't know the difference between profit and cash. They go to the CEO and said, we are profitable, we are doing lots of services, but how we don't have the cash? Where is the cash? Because to profit is not the same as cash. So you have to put it in your mind. Profit is different than the cash. Maybe you are so much profitable. However, you look at your cash, you have a shortage and deficit in your cash. Why? Let me tell you why. back to this P&L. As per the accounting standards, okay, in the P&L, when we have to register the income, for example, the service that we are providing to our inpatient and our outpatient, whenever we do the service, okay, we have to register it as an income in our P&L, whether we got paid from the insurance or whether we didn't get paid, okay, or we are paid for 20% for now and 80% after 2, 3, 4 months, 6 months, maybe in Lebanon after 3 years, we don't know. So whether I receive the money now or in the future, I have to register it as an income. The same thing is for the cost. The cost will be registered in the P&L. The P&L is a statement that will show us the profitability. Eh? Also, it's registered whenever we do the cost occurs, okay, whether we paid it for now or I have to pay it in the future. So, and another thing also that we have to mention here is the non-cash items which is the depreciation. The depreciation is like a cost in the P&L, and we don't pay it to anyone, so it's a cost, but we don't take, for example, this $2,000 and give it to a person named depreciation. So it's a non-cash item, but it's deductible. So this is how we calculate the profit. So there are items here in the P&L that is not reflecting the cash, and that's why we elaborate the cash flow statement. Is the cash is equal to the profit? So why to not stop on the P&L? So why we have the cash flow statement? We have the cash flow statement. It's the statement that when I look on it, I can know the cash of the company, and the cash flow statement is a way more important than the P&L. Yes, you have to know how much profitable, but the most important thing is to know how much you have cash.
Yeah, yes. Sorry, just to continue, because I think this is very important.
Agree? Do you agree with me?
Oh, yes, definitely. In fact, anytime that I have this conversation with CFOs, they say, you know, for me, cash is like the blood, you know, in the body. So then, but if we can elaborate more into why is so important the cash flow and what is the problem? So if we don't have this clearly stated in our day-to-day.
So cash is the king in everything. It's like the oxygen or the air that you breathe, okay? So if you don't have cash, and even if you are profitable with millions of dollars and you don't have the necessary cash, you cannot run your business. It means you cannot pay your salaries. It means you cannot pay your suppliers. You can reimburse your debt. You cannot reimburse your debt, and you go to a problem in your liquidity, and then you problem in your solvency, and then you will have too much troubles, and you get bankrupt, and you will fail. And the studies showed that more than 80% of the companies failed because of the problems in the cash flow. So what I always suggest to my clients that they have to keep a buffer of cash that could let them survive for the next 6 coming months. I know that cash is very dynamic. It's hard to predict, but at least you have to do this job and this exercise to forecast for maximum 6 months, not that much. But you have to foresee what will happen in your cash and to be prepared to, as a buffer of cash, as a reserve, to be able to pay your duties. You ask me about the problems in the cash flow. Yes, we have too much problem in the cash flow. First of all, the problems come from those main areas. Sometimes we predict sales. We predict that we have to sell or do doing those services, and we get sales that are lower than expected. And sometimes the customers do not pay on time and even don't pay. And we have costs that are higher than expected. We expect to pay this cost, but it's higher than expected, and especially in Lebanon because of the currency devaluation also. The other thing is unexpected or hidden cost. We didn't predict that we have to pay this cost, and then we have to pay it. So those are the most important cash flow problems. And on top of that, when you want to forecast the cash flow, it's very hard to identify them, okay, to determine the amount, because as you know, it's very dynamic, and really it's hard to identify the cash flow, especially in the future, the cash flow that we receive in the future. And it's really hard to determine the timing of the cash flow, whether you will receive it after 1 month, 2 months, 3 months. Maybe in your account, yes, this receivables you should receive it after 2 months, and at the end you didn't receive it. This is the risk on the cash flow. So the cash flow, we are based that we have to receive the cash flow, but there is a high risk of not receiving the cash flow. That's why we have to choose our clients very consciously in order to make sure that within times we will get the cash flow. Or also whenever we do an investment, we invest in this machine or another machine, we have to make sure as much as we can what will be the cash flow that could be generated from using this machinery. It's X-rays or MRI, whatever will be the kind of the machine. So we have to a little bit be accurate in our numbers, so how much it could generate cash in order to be higher than the cost of it and to create value for the shareholders. So all these problems coming all together really affect the cash flow of the company. And that's why here the cash flow manager or the treasurer should be really handling well the cash flow in the company. Yes.
But then, so the 100 million questions will be how to manage cash flow in the time of crisis, because everyone will have, cash flow problems. So how do you manage this?
Times of crisis, like in Lebanon, for example, we have all the crises coming together, the economic, financial, currency devaluation, social problem, political problems, whatever will be. So usually we find we are faced by crises that we are not predicting them, and really we are stuck how to manage our cash flow because we are doing something really that's facing us that we are not used to do it. And here in this meeting, they are very stressed how to manage the cash flow in terms of management. But do you know why they are so stressed and tense? Because there's no woman in the room. They should have a lady between them, because by having a lady, they can solve the problem better. Do you agree with me, ladies? Do you agree with me?
I have to agree. I have to agree.
Yeah. So there are lists of things that you can do to manage your cash flow in times of crisis. Of course, we'll not go deeper in each of them, but what you have to do mainly is to closely monitor your cash flows and cash flow forecast, and not only weekly basis, mainly on daily basis. Okay, you have to foresee them in a very accurate way. And you have to identify the future gaps and build your cash reserves. As I told you, always have a reserve, a buffer of cash for the worst case scenarios. And prepare yourself to get a line of credit from a bank. Prepare all the papers or everything. So whenever you have the cash, you can go to the bank and get the cash. And prepare also your shareholders for an increasing in the equity. So by this, you can also get fund to the company. And you have to work on optimizing your cash flow, working more on the delays, etc. And the most important thing also, whenever you want to manage your cash flow, is to build this risk or to do this risk assessment, identification, assessment, and mapping. It means what? What you have to do in the meeting is to elaborate what are the risks that are affecting you or that are challenging your cash flow. You have to enumerate them and put them in order of priority, which is the most important one that's affecting you, 1, 2, 3, 4. So those are the risks that are affecting our hospital. And then what you have to do for each risk, you have to set the probability of happening. If this risk will happen, it's a high probability of happening. Is it a low probability of happening or a medium probability of happening? And then after predicting the probability of happening of this risk, you have also to assess the impact of this risk on your performance. So there are two main things here to add next to the risk, which are the probability of happening of this risk, and when this risk happened, how it will affect the performance of the hospital. And in the impact also, we can say low, moderate, or high. And then we can write an action plan or a mitigation plan that we could take the necessary measures and the necessary actions in order to decrease as much as we can the impact of this risk on the performance of the hospital. This is mainly how to do the manage the cash flow.
So then with all this risk and cash flow, so the question for me to you will be, so why financial management is so important for people that are not the financial roles? So what will be the main role, the main goal of financial management?
Whether a hospital or not, from any different industry, the main goal of the company by itself and the financial management is to generate profit for the company, is for the profit maximization, is for to create value for the shareholders. If not, why these owners should invest in this hospital? They go and they invest their money abroad, elsewhere. So the main important thing, and whenever I invest, I'm searching for a profitability, and the people working in this hospital should have this end in mind, and especially the financial manager and the financial they have to know where to invest and where not to invest. They have to do their financial planning in a good way, their financial forecast in a good way, in order to drive the value creation in the company. So the goal in any company is to increase the market share, to have more sales, to have more service to provide, and to beat the competition, and to decrease the cost, etc. So their goals are, if you want, contradictory, because whenever you want to generate profit, there is a high risk. So risk and profit, they are together. So more profitability, it means you are taking more risk. So what is the main goal of the financial management is to try to maximize the profit while decreasing the risk as much as they can. So this is the balance that they have to do in the financial management in order to take the right decision to create value for the shareholders, and not only for the shareholders. It's not the right answer to only talk about the shareholders. It's for all the stakeholders. It means for the employees, for the patients, for even the government, etc. All of those parties are interested in the profit of this hospital. So financial management is at the heart of any business. So it's one area that can help drive it forward. Any other questions?
I have a question for you based on what you said, and we had few questions in the chat. So I will start by the order of when the questions were popped in the chat box. Reem has asked, knowing that finance and accounting are different, why do we find some universities or even jobs, like probably she means companies, organizations, combining these two roles?
Depending on the size of the company. So more you go to a larger company, you will have a CFO, you will have the treasurer, and you will have the controller. More you are in a very small company, so the accountant is doing the accounting, and maybe he is doing the analysis at the same time, because it's a very, very, very small company, but it's not the right thing. But more you are growing with time, you have to separate these two functions. As I told you, there is a manipulation in the accounting system. There is a financial analyst, there is an auditor, an internal one, and the external one who will do the auditing on this work. And in the universities, no, they are separating them. For example, I did a finance major. There is another major with the audit major. I don't know on which university you are talking about, but in most universities, the degrees are different. You can have a degree in finance and you have a degree in accounting. In accounting, they take lots of things related really to accounting standards. However, in finance, you will be more focused on the corporate finance, how to create value, what to invest, where not to invest, and you will be also more into international market, etc.
Thank you. Walid has asked, what are the consequences of the company, maybe the companies that do not comply with the transparency rules and conditions?
They're getting bankrupt. So we are not waiting someone to tell us if you are not transparent, what will happen. If you are not transparent, you are تتريش يعني toi-même عم تخدعوا حالكم. I don't know how to say it. So it's not good to.
So you're fooling yourselves.
You are fooling yourself. So what you have to do is you have to be transparent for the stake of the company. Okay, so first of all, you should be, because the company should rely on your numbers. It's related to the company and the company's growth. So it's a must to be like that. Whether you have something that will give you penalties or not, so it's a must inside of your company. So if not, you are dishonest in your standards, and nobody will invest and will end it by getting bankrupt. Like the case of Andron, by the way.
Yeah, Reem, in response to your question, which university you're talking about, she answers, I'm talking about the Lebanese university, because in the master's program, they have combined these two majors or these two professions. So probably this is unusual.
I don't know. So this may be exceptional,
Yeah,
or maybe they have
unusual.
problems that are mixing together. But no, there is a master in finance and the other one in the accounting. So I'm from the people who did my study in the finance. Okay, so I'm not that good in accounting, by the way. There are many people that are better than me in accounting. However, I'm better in finance and analyzing those numbers.
All right, we have a question from Naeem. He said, as we know that the terms, ratios, matrix are probably standard for all the industries, especially when we follow the IFRS rules, why a financial opportunity in a healthcare organization does not consider applicants from different fields? Is there any specific requirements needed to be exercised or learned? Amazing question, Naeem.
Yes, thank you, Naeem, for the question. And I believe that finance, okay, for all this sector is the same. So we have, as you said, the same issues in the financial statement. So the financial statement of a hospital is not, it could not be different than the financial statement in the food processing. So we have the same templates, etc. But maybe it's depending on the specifications of the hospital in their requirements. Maybe they with a background in the hospital, okay, or in the healthcare. They don't want someone coming from different, because the business model in the hospital, it relies more, as I mentioned you, it relies more in the insurance, on something that is really delayed in time. Maybe they are not going to take too much risk. They are risk aversion. They are not using the technology. And now I think the healthcare service, not like other services or sectors, they need to change their business model toward integrating more technology in them. So I think here, maybe the hospital that you are applying for has some specifications. Maybe they have some problems in the cash flow, etc., and they need qualified, or I don't know, the more experienced people in the healthcare. Or maybe they want to build partnerships. Do they want the people that work abroad and they have connection? So maybe it depends on the requirements of the hospital.
Thank you, Lara, for that. Mirna has asked how to balance between high profit and the risk of losing stakeholders.
Whenever you have to decide, if you have a project, you have to invest, you have a machine to buy, or we have to open a new department, whatever it will be, what you have to do is to assess and to do the financial planning and financial program in a very good way, to know really how much it will generate cash, in order to know if this investment should be done in order to create value for the shareholders. So whenever you are assessing this, you have to take care of the risk. And the risk here, it could be also in the risk of financing, from where you get the money. You have to pay your cost of debt. You have to, there's the cost for the equity, etc. So more you are risky, they are asking more a return. So whenever you do an investment, so you have to look at the cash flow, but at the same time, you have to look how much it's risky to do this investment, and it will be reflected in your weighted average cost of capital or your cost of debt, etc. And if you are not calculating those costs well, you will have a value that really is misleading, because you didn't take the risk into consideration in your calculation. So that's why it's very important for the financial management. Yes, he saws, for example, he sees, for example, yes, that this investment is profitable. When he will do the calculation based on numbers and on accurate things as much as he can, so he has to integrate the risk through the cost.
All right, I have a comment probably, or a question from Elsie. It reads, donations, government support, and social security backups are booked probably as revenues.
Non-operating revenues.
Non-operating revenues.
It's non-operating revenues. Okay,
Right.
It's not in the operating revenues.
Okay, Aline, that's not me, that's Aline, a participant. She says, thank you. Even though I'm in the field of education, yet I got a glimpse on how to address this with the minimal knowledge needed in case I start my own business one day. Well, we're glad to hear that, Aline. Thank you for your comment. Walid asks, does the fintech have impact to generate profits or not?
Not fintech in what? You want to use, do you mean you want to use the technology in the hospital? What is the other question?
All right, maybe we will wait for Walid. Walid, would you like to go off? Would you like to go off mute and probably ask the question in person? If not, please enter.
So let me tell you one thing. Yes, for me, the hospitals or any company, they have to integrate the technology in their business model. Most of the healthcare, they are risk aversion. They don't like the risk. And thanks for COVID, who are forcing the managers in the hospital to think another way. It puts them outside of the box. And now, for now, because they have lower operating margins, they are start thinking how to change this business model by integrating more technology, more virtual platform, more telemedicine, by decreasing also their cost and trying to diversify their service. Maybe they have to close some department, do partnership with other departments. But yes, I think the future is going for the technology. And yes, the technology should be in the business model of hospital. But of course, we need time. We need time to change this mindset.
Absolutely, it's all about the mindset. Muhammad says, I have a question for Dr. Lara. Could they advise which kind of measures we could take in healthcare profession to improve the current economic conditions of the world regarding the COVID-19 pandemic? Because almost all the globe is suffering from economic crisis, energy crisis, and future. We are going to face food crisis, high inflation rate, unemployment, almost 3.5 billion people lose their job. Maybe he meant lost their job. So how could they maintain their finances?
Those are external factors that will affect the performance of your hospital. So it's not something internal, that is external factors that are impacting your business. What you have to do is, like I said, those factors that you are mentioning from coming from all over the world, you have to list them. And you see, maybe one of them will not impact your hospital and the other one will impact it in a very high way. And what you have to do is to try to mitigate the actions, try to set down the actions and what to do in order to decrease their impact on your profitability. But there are not key ratios or key metrics to measure them and to see, oh, we have this number, we have to think other way. No, because there are external risks that are hitting your company, your health, your hospital, whatever will be your company. So that's why the best solution to do is to enumerate them, put them in priority and assess their impact on your company, and then take the necessary measures. Maybe you decide to close some departments, maybe to open new departments. Whatever will be your solution, by focusing only on the departments that are generating profit, by doing the telemedicine, as I said earlier, by integrating a new strategy, integrating a new business model, integrating a new technology, etc. But it's an external, and you have to, as I said, there is a slide for that. You have to enumerate your risk and so assess the assessment of those risks on the performance of your hospital.
Mariano, you had a question.
Yes, I do. Just the matter of the understanding, because sometimes we try to mix this. So the difference between depreciation and amortization, because this is coming to what I can project to the yes, if you can just elaborate a little bit, because I think it's quite relevant to understand.
Confusing. So most of the people got confused but between depreciation and amortization. So the assets are divided into two kinds, okay? The tangible assets, it means everything that we can touch, okay? Like the computer, the PC, the furniture, the lands, the buildings, the equipment, the machineries, etc. Everything that you touch are the tangible assets. For the tangible assets, you use the term depreciation, because whenever you use them, it will be depreciated with time. So depreciation is linked to the fixed, to the tangible assets. However, we have another kind of assets, which are the intangible assets, which are related to the branding, for example, to intellectual property, to the trademarks, which are not tangible. So for those issues, for those assets that are intangible, we use the word amortization. Hope it's clear now.
Sure is. Thank you for that. As Sora said, I finished my master's at the Lebanese University. The accounting major is different from finance in terms of courses and certificates. So that's another affirmation. Anna, if I could use only one statement to review the overall health of a company, which statement would I use and why?
Cash. You have to evaluate the cash. It's the cash flow statement. So this is how to evaluate your company. The most important thing is to see the cash of the company. More cash, it means you are running the business successfully. You have a deficit in your cash, it means you are getting in trouble.
All right, Dr. Ramzi Mfarij popped a question in the chat box, but it seems he's ready to ask it in person. Please go ahead, Dr. Ramzi.
Okay, thank you for this wonderful presentation. When we were talking about profit versus cash flow, I was wondering about if you could please comment on the role of revenue cycle management in sustaining cash from the revenue and how it would play a role in that, because RCM is very important these days in bringing the revenue that we generate into cash. So just a comment on that. I have another question that I will ask after this one.
Maybe you have to discount the bills. So you have to work more on your receivables. You know that receivables, it means that you have a delay in time. So you have to work more on the working capital. It means, so you have to see what you have as receivables with your patients or with the insurance company, etc. Try to negotiate earlier dates. If not, maybe you can try to find another option by discounting. I don't know if you can discount those things and get a credit from the bank. Those payments. And then what you have to do also to manage your payables. You have to go to your payables and how much you have to pay for the suppliers and try to negotiate with them as much as they can to have the longer delays in payment. For example, you have to pay your suppliers within 1 month, 2 months. Try to negotiate with them longer terms. And also, as I said, try to always prepare a credit line within the bank or any financial institution that whenever you have a missing point in your cash, directly you go to the bank and get this credit line. Or maybe you have to put your owners, you need this cash. So this is the only way in how to manage it at the level of the working capital.
Revenue cycle management, التحصيل, يعني the people that talk to insurance, the people that try to get you the cash from cash payers. And most of the time, revenue can be lost if RCM are not doing their job in providing answers to the insurance companies when they have queries or what have you. So that's why most of the time revenue is not translated into cash flow unless you have a really strong revenue cycle management. And as to the other part of the answer, which you elegantly alluded to, the impact of cash flow crunch on revenue and cost, yani the profit and loss. So this would be my second question. And so if we do not have enough cash flow, then it would affect our revenue. So say, for example, you accept a patient as a level 2 where you get handsomely paid, but the insurance wants to arm wrestle you into a lower level of payment. If you do not have cash flow, you're more likely to accept a lower level of payment to sustain your cash flow. Also, the payment that you make on certain items, it may be discounted if you have the cash and can pay upfront a big sum of money. So say you're buying drugs and you can buy ahead of time for 3 months, or if you buy for 1 month at a time. So cash flow is king, and it affects even your revenue if you do not have it. And you can go back to Warren Buffett's famous sentence, the market can remain irrational much longer than you can remain illiquid. So liquidity is very important. And I think you mentioned part of the second question answer in the first answer that you made. So always revenue cycle kind of puts the gear between the revenue and cash flow, but it also has an impact later on through feedback to the different departments. And then you have the cash flow crunch that has an impact on revenue and on the cost, because you cannot buy large amounts upfront in bulk, and it affects the supply chain. So the people that do the purchasing are supply chain, the people that do the revenue are revenue cycle management, insurance company negotiations, and what have you. So it all is connected through gears that are hidden and there's feedback between all these different departments at the time of crisis. The professor and you mentioned elegantly the mitigation plans, like line of credit, having certain assets you can sell, having cash on the side. This is a very, if you're a fortunate, if you're a fortunate company, you have that. Otherwise, you'll just be taking one loan after another and delaying payment and what have you. So it's very interesting to look at these different departments and the positive and negative feedback that they have on each other. Well, thank you very much.
Absolutely, absolutely. Thank you for your feedback.
You're welcome, Dr. Ramzi. Thank you very much. The next question is from Hareen. Hareen said, maintenance cost in many hospitals consider it as a big cost, while it considers as investment in your asset, in my opinion. So as a biomedical engineer, how can I persuade the management this is considered as an investment and not a cost? And how do finance people consider it?
So the cost of the maintenance is a cost. It's not an investment. What you invested, it when you bought the machine. Okay, so when you bought, for example, the X-ray machine, it's your investment. However, you have to pay the maintenance for it. So if you don't do the maintenance, so the machine will not be functioning. So it's a cost, and it will be a direct cost because it's directly related to the functioning of the machine. So it's not an investment. The investment is when you take the money, okay, and you invest as an asset in your company. And this machine should generate, you have to see, for example, do the study that this machine, and you have this, what we have to convince the managers, if we buy this machine or we update this machine, this will generate for us more than the previous one. And the cash that will be generated by this machine is higher than the cost of this machine. So by this, you are doing an investment. Other than this, the cost of the maintenance is a cost. Hope it's clear.
Thank you, Lara. Mariano wanted to probably also comment on a previous question. I think the one that was asked by Dr. Ramzi.
Well, yes, I think he just put, you know, the finger where the okay, point is, and I think it's he's not there now.
He's not there. I think let's wait for your answer because I'm sure your comment is very valuable. Let's wait until Dr. Ramzi gets back behind his device and
perfect.
And, yeah, thank you for that. Walid has said, Lara, you refreshed my knowledge I received in my Master's of Business Administration. Mm-hmm. So that's good to hear. Here's Dr. Ramzi, he's back. Mariano, please go ahead.
Yes, no, I was saying that what Dr. Ramzi said is basically not the revenue cycle, but the management cycle. Because I think you pointed out all the different aspects, all the different individuals that are related to the care, to the patient care. Because what you just said, if you take this to a hospital, everyone in the hospital is part of the revenue cycle. And then you mentioned internal aspects and external aspects. And definitely at the end of the day, all these departments they have to row in the same direction. And I think that is one of the main KPIs, if you like, or challenges of the senior management, you know, to allow and to interact with patients, to interact, you know, someone who is coming to your facility with a health problem, and you need to ask that person or the family that the service needs to be paid in some way. Someone that is, you know, the insurance doesn't cover your assistant in the hospital, and someone needs to pay for that. So I think this is so important what Lara just said, because if you manage this as a whole, I think that the management of the hospital and the institution itself will go you know, in the right direction. I think that's very important, your comment.
Okay, so the executive committee made from CFO, CMO, CEO, they look at these things and they try to put the gears in action for all the different departments. But in an American-based system in a hospital, revenue cycle management is called RCM. It's a separate department. So the overall management is for the executive committees, for the CEO, and the people that help him on an executive board. But if you look deep inside the RCM department, which I don't know in Europe what you call it, is exactly that, revenue cycle management, which makes the revenue translate into cash. And they talk to insurance companies, they manage the queries. So an insurance company these days doesn't want to pay you what you ask for, but you have to convince them. So you have to go to the coding, to the narrative, in the notes of the physician, convert it to codes, to language that insurance understand. It depends on the mode of payment, whether it's a DRG or per diem, whether they do the translation through coding of the narrative, descriptive terms of a physician into codes that insurance understand, and they provide the evidence that this service was rendered, so you get paid, and to the level of service rendered, so you get paid for the duration and the intensity and the complexity of the service rendered. And then there's an argumentative phase where the insurance company will come back to you and say, no, you didn't render the service, we want to get our money back. Or they will say, this service deserves a proactive payment of this much, prospective payment of this much. And if revenue cycle management do not know how to do the coding, how to translate, how to offer evidence, then the insurance company will have the upper hand on you. And what will happen is, while you are being asked these questions, the revenue will be delayed 6 months because it's still not authorized. So it didn't go to the authorization department for payment. And so the revenue cycle management handles keeping the gears between revenue or cash flow going from the insurance companies and from the cash payers as well. So in an American system, this is their role. The real management of the bigger picture, the helicopter view, has to come from the CEO, CFO, and maybe with some input from technical, CMO, CNO, all these other departments. But it is the same. The question remains, when you look at management of a company or of a hospital, they are nearly the same when it comes to general terms. But in particularly, RCM is important in keeping the gears going between the revenue generated into cash flow. So I hope that explains it. So what you're saying is right. It's a general term, maybe in Europe, in the UK, in the US-based systems, in the Gulf-based systems, this is the role of RCM, and it's a separate department under finance. It has coders that look at this, as I said, the medical terms and what have you. It can be headed by a physician, it can be headed by a nurse, by a person that has a coder degree. Everyone can be head of RCM, and if they understand the jargon and the insurance company requirements, basically. I hope that answers the part of the RCM. And cash flow these days is very tough, and that's the biggest problem everybody is facing after COVID. Revenue was generated, but cash flow, well, I think it's going to take a long time to get the cash flow going. So in the next year, it will be much more difficult because you're going to see a drop in revenue because of the lost income coming from COVID, which could be in some hospitals 20%, 25% of the revenue generated. And with COVID under control in some countries now with the vaccination, how to generate revenue to make up for that while cash flow is still pending, it's still a crunch. And you didn't get going with the other departments that are not COVID dependent, like plastic surgery or other things. So we'll see what happens next year. It's going to be the most interesting year for healthcare and probably the most difficult.
Brilliant discussion. Thank you, Dr. Ramzi and Mariano. We still have few questions and comments in the chat box. So Annette has said, I think that the staff need to know about this. They do not see the need to save, they waste, and this is part of money. The consumables must be paid still. So we've had a discussion about all of this, the cost that is due to consumables and waste in consumables. So what do you have to say for that, Lara?
Is it a question?
I don't know, would you like to comment on that? She just commented that she thinks the staff need to know because it's very important to save because consumables.
The role of the management to spread the awareness of not wasting the consumables and use them in the right way, because it's a cost at the end. Even if you waste it, you put it in the garbage, but at the end you paid for it. It's a cost. So that's why they should disseminate this awareness to each, because everything comes from the awareness. Whenever you told them, you explain them the impact, they will take care of it. If not, maybe they will not pay attention.
Right, that's absolutely right. Now, Daniel has said, how can we study the profit of a healthcare business in a new country that we do not know about a lot?
The country, you have to do a market research. For example, if you have to open a hospital in X country, you have to go there to do the market study, to see the competition, to see the regulations, to see what's coming in, what's coming out, what are the business model with the insurance there, with the government there, with the income of the people. So what you have to do is to go on the field and get the right information, work well in your business plan, in your market study, and then you take the decision if you will invest in this country, yes or no. After collecting all the necessary data, doing the business plan, etc., doing the necessary forecast, analyzing the competition, what other hospitals are struggling with, the challenges, the SWOT analysis, all those things you have to do them in order to take the decision whether you have to open this hospital in this country or another one.
All right, and we have from Fatin Zaiter, Dr. Lara, you always awaken in me the desire to learn and know more and more about finance. During your presentation, we can clearly feel the love you have for this topic. We need people like you in our country to be successful. Thank you. Thank you for that, Fatin. That's very empowering.
Thank you so much.
Yeah, absolutely. Irene has commented that he lost connection and he did not hear the answer for his question. So I've invited Irene if he would like to go off mute and ask the question live. Irene, are you prepared to do that? Okay, anyway, this session is recorded and everybody would receive the recording, so probably you can hear the answer for your question in the recording. No more questions. Thank you, everybody. We're already 15 minutes past the time. Thank you, everybody, for your time with us and all the interaction and the comments and the questions you asked. I just had a comment in the chat before we close. Walid said it's a wonderful presentation indeed. Thank you, Dr. Lara, for your information. So before we thank Dr. Lara, Mariano, and everybody else, I would like to invite you all to our 2-day financial management workshop that Dr. Lara would run on the 4th and 5th of February 2022, and these would be a Friday and a Saturday. So it's a 4-hour session every day for 2 days where Dr. Lara will maybe more
hours.
So Dr. Lara will prepare us to understand financial statements and will equip us with the tactics and tools to improve our leadership and financial management skills as executives, so we make better financial decisions. Of course, this group will receive later, probably in a month or 45 days time, the brochure and the invitation to take part in the 2-day workshop that will be conducted by Dr. Lara through Stokos and Knowledge Zone. Now, I want to thank Mariano for joining us and, if I may, co-moderating the session.
Thank you, Dr. Ali, and thank you so much, Lara. I think it's much needed to understand, mainly in this difficult time that we are passing through with the cash flow problems, and so it's pretty much needed this understanding of the finance for non-finance professionals. So thank you very much and congratulations, Dr. Lara.
Lara, thank you very much. you have made this scary quote-unquote topic very friendly to everybody. It's a beautiful introduction to what's to come on the 4th and 5th of February. You have just given us a glimpse. You've made it easier and less threatening as a topic, and I am sure everybody joins me in being so excited to join your course on the 4th and 5th of February. You have done an amazing presentation, made everybody feel comfortable with finance, which usually is something that we would like as executives to get away from, because there's someone who takes care of it, so why get involved? So thank you one more time. Once again, we are very fortunate to have you on our team at Stokos, and there is more to come with you. Thank you.
So glad to be part of Stokos team, and so glad to do this session, and I hope that everyone take a good feedback about the finance. And finance is not something hard at all. Whenever you understand the statements and how to analyze them and how to analyze the ratios, I think you will fly high with your leadership in the hospital.
Thank you. Before we say goodbye, I just want to acknowledge a few comments that are popped in the chat. Dr. Ramzi Mferrer said, amazing discussion and many thanks. Dr. Lara was amazing and I learned a lot. We're glad to hear that, Dr. Ramzi. Walid said, how will we receive the certificates? You will all receive attendance certificates within probably 3 to 5 business days to your inbox, to your email. You will receive the attendance certificates. Mohammed said, thanks a lot, Dr. Lara and Dr. Aline, very knowledgeable meeting. You're welcome and thank you for joining us. Elsie Daboul says, thank you for this great session. Indeed, Elsie, it was a great session and thank you for your support in joining us. Mirna said, thank you. I will surely register with you, Dr. Lara, in the upcoming course. That's excellent news to hear, Lara. Thank you, everybody. And you will all receive your attendance certificates to your inbox. Oh, and there's one more comment from Mirna. Dr. Aline, as usual, you are our treasure. Oh, thank you for that, Mirna.
We agree.
Oh, thank you. Thank you. That's very humbling. I'm very grateful for your comments. Walid Mahmoud said, I will register too. So it's amazing that you just put in us, Lara, this interest and enthusiasm to attend your 2-day workshop. I'm sure we will learn a lot and we'll learn more. Muhammad Ali said, I'm working on a healthcare project as an economic researcher. That would probably he meant would be a pleasure to work with Dr. Lara. All right, Muhammad, probably you can email Elsie, who sent you the confirmation for the registration, and put your idea in an email and we can take it, definitely discuss it further, and loop Dr. Lara in, of course. Thank you, everybody. One more time, brilliant session, Lara. Thank you, Mariano. Thank you, everybody, and a good night from Sydney. Bye-bye.
Bye.
Bye.